Hello and welcome to ETBFSI.com. My name is Amol Dete and you are watching second episode of Budget Expectations series. As the run-up to the big event which is happening on the 1st February, we are trying to understand what is it that the BFSI leaders are actually expecting from the finance minister on the 1st of February. Friends, readers, viewers, I'm sure you know that India is a much better situation today. The GDP is growing, tax collections are robust, infrastructure spend is also at all-time high. The global agencies have put India on the top list. Sensex, Nifty, DII, FII, all are partnering together. But with the democratic spend, there is a worry for fiscal deficit as well. At the same time, export growth, manufacturing, FDI has not picked up the way we wanted. And the landscape that I see is, I think, we need to learn a lot from this particular aspect. So, looking at the current economic situation, what is it that the finance minister should do is what I'm going to ask to the top minds of the BFSI sector. So I will ask them these questions, and I would also like you to ask questions and send your queries if you have any specifically related to budget. Also, remember that the ETBFSI is also available with the WhatsApp channel now. If you're not subscribed, please do that. And let me begin by introducing you to my speakers. So, my first speaker for this particular session is Mr. Raju Ahuja, the Executive Director of RBL Bank. Raju, sir, glad to have you.
Likewise, Amol, always a pleasure to listen to you and read your blogs. I'm a big follower, and thank you for having us.
Thank you. Thank you so much, sir. My next speaker is Sachindra Nath, founder and MD, Ugro Capital. Sachindraji, glad to have you.
Thank you so much, Amol. It is always good to be with you.
Thank you. Thank you so much. My next speaker is Mr. Madan Sabnavis, again, a veteran economist working with Bank of Baroda as a chief economist now. Madan, sir, glad to have you.
Yeah. Good afternoon, everyone. Thanks for inviting me here.
Thank you. Thank you, Madan, sir. And my last speaker for this particular session is a veteran insurer who was also heading LIC Mutual Fund, Mr. Nilesh Sathe, the former member of IRDI, the veteran LICite and the insurer expert working with a lot of private insurance companies also on the board right now. Nilesh, sir, glad to have you.
Thank you, Amol.
So, gentlemen, to begin with, I will divide my conversation into two parts. First is common questions, and then we'll get into the specific questions. So, the first question to all of you is, what is your checklist from Budget 2024? What is your expectation? What is it that you would like to see Finance Minister delivering on 1st February? And Raju, sir, I will start with you.
So, Amol, I think I'd like, maybe at a broad level, policy continuity. A very consistent message to all the stakeholders. I'd like to hear them talk about a medium to long-term plan on fiscal consolidation, debt to GDP for government. I'd like to hear about enablement so that the underlying activity continues to be robust. And finally, what I would expect is that the government would continue leading in with the capex, which will ultimately lead to lower cost of doing business in the economy and returns, because I still think that we need that. So these are my broad things. I think the details will not be as important as whether this conceptually continues in the new 5-year term of the government.
True, noted that. That's too good to begin with, Raju, sir. Madan, sir, let me come to you and take your perspective.
See, the way I look at it is that this is going to be a vote on account, which means that there's not going to be any significant announcement on the policy front. But this said, we should remember that based on past experience, we have seen that the final budget, which comes out probably after the elections in June or July, normally tends to be very close in terms of numbers which are presented in the vote on account. So I think based on this, I think what I would be expecting is a lot of continuity. I think that is what is most important. And the kind of a balance which the government has actually struck between social welfare as well as economic expenditure, that is on the capex side. I would like that kind of a balance to be maintained because, notwithstanding the fact that the economy is doing very well and there are new records being achieved on almost every front, we still need to look at what happens at the lower levels of strata. And that is something which the government has been focusing on. So I think that is something which will have to continue. And of course, as an economist, we always like to look at that fiscal path, whether we're going towards that 4.5% number and how fast we're going to achieve it, because by 25, 26, we're supposed to be at 4.5%. So that'll be something which I would be keenly following.
Sure, obviously, that's going to be a big theme on the fiscal consolidation, and we'll get some specific points also from you in next questions. But let me go to Sachindraji and take some perspective on the NBFC side, specifically on the SME financing side. Sir, what are your expectations?
So Amol, I always say that dil mange more. But it is now very clear that India's prosperity and economic growth is dependent upon the prosperity and stability of MSMEs. For this 85 lakh crore of credit gap, which is 95% of which is in the universe of this 15 lakh to 15 crore turnover, has to be grown, which requires continuous injection of liquidity so that credit can be given. So we have seen a narrative from RBI saying that banks should not lend to the NBFCs. They should focus on co-lending. But in some form and shape, on one side we understand that that is what regulator wants. But the most of this credit dissemination is done by NBFC, which is smaller, medium size, not the large ones. And the consumption of capital from banks is from the large NBFCs. Yes. So I would definitely expect that some form of a policy support in terms of both how these medium-sized NBFC, which are deeply focused on serving the need of underserved through some, whether you enhance the credit guarantee scheme, whether you provide liquidity support, whether you push RBI to change a little bit of architecture with respect to the co-lending, that need to be done. All governments are looking at making MSME more robust, but we have to go just beyond saying that we are looking at it and figure out. And second is that if you look at banks' consumption or banks lending to NBFC, of that 85% which goes to AAA and above, almost 50% of that is consumed by public sector NBFCs or public sector enterprises, which are sovereign by nature. They don't need to go to a bank or public sector bank and borrow from there. They should borrow from the market. So technically, government can provide a sovereign guarantee of a large public sector NBFC and let them borrow from the market so that limit get utilized by deserving NBFCs.
Valuable thoughts, Sachindraji. In fact, a lot of PSU banks have started going out aggressively to raise funds and not just depending on the government or the typical segments. Nilesh sir, let me come to you and take your view specifically for the insurance, as you heard the economist, banker, and the NBFC.
Not just insurance, but the union budget is expected to put the economy on an accelerated growth path.
Absolutely.
Especially after the effects of pandemic, which we have now left far behind. A couple of things which are expected from the budget is ease of tax compliances, simplification, and digitization. These are the cornerstones to enhance the ease of doing business in India. And again, infrastructure spending has to go up, and with the optimistic outlook towards sustained growth. Now we are looking forward towards the announcements of the finance minister in the interim budget. Focus also has to be not exceeding the 4.5% target of deficit financing. As far as insurance is concerned, you may be aware there were proposals to amend the Insurance Act, which have almost been finalized by the Ministry of Finance, but not placed before the Parliament. This interim budget. But maybe sooner or later those changes should happen. So these
Correct.
are the expectations.
Sure, I think we got a basic perspective in terms of what exactly you're expecting, but let me get into specific. And before that, friends, if you have any questions, also do shoot your questions. I will try my best to take it up. So, Raju sir, let me come back to you now. And when you look at, obviously on one side we are seeing a great positivity. India is shining. That slogan is back in a way. All the economic indicators are quite positive, but majority of this growth is driven by the public capex. The private capex is still an issue. Is there anything specific that you think, being a banker, that the government should do at this point of time, which will make private companies and specifically India Indian corporates at large to spend more aggressively? And we can also then see the private capex picking up. So, anything on
Yeah.
that front specifically that you want to say, sir?
So, Amol, I think, I mean, while I do agree that the government has been front loading a lot of capex, we are seeing early signs that the corporate sector, because you don't forget, the very large corporates now seldom go to banks for financing. They have other avenues for raising debt, both internationally and domestic. But I do see many signs that the mid-sized companies are coming back. And there are three, four reasons why I believe this is a continuing thing and we should not see a data point as of today or yesterday. So, first of all, I think capacity utilizations on the average have improved. I think they are at least last count 75% plus. And the more you get there, the faster people believe that the capex will start happening.
Right.
Second, I think the leverage in the corporate sector broadly and banks is a lot healthier balance sheet. So those are good starting conditions. And the third one I talked about policy continuity as well. So I see that this will continue its pace. But will we see industrial growth the way we are used to in an era where actually banks were the major providers? And you see all the metal plants which have consumed a lot of credit, you are unlikely to build a metal plant from scratch now. I mean, steel and non-ferrous. You're going to build roads, you're going to build renewables, you're going to build airports, ports, and like I said, the capital intensity from some of these names is not going to be as high as it's been seen in the past. Okay, so most of the capex we see is debottlenecking, working capital expansion, some machinery, and obviously infrastructure. And
Right.
I think we should just let that happen naturally, because I think the animal spirits and the entrepreneurship of the Indian corporate sector at all sizes is here. We should not try to predict what will happen. Just make sure that the enablements and the starting conditions are kept as good as possible. And obviously, if you talk about cost of logistics in the country is coming down, I think all of these are very good conditions for me to believe. In fact, we've never been so uh, so positive on the growth of the wholesale business for us as we've been now. So I think I would not tinker with it too much. Yes, we can talk about ABC things, but I think as long as people believe that there is a framework which is going to continue improving, you'll see a lot of action on the ground, and action will happen across all sectors, in my view.
Sure. That's in fact a very positive note. Action is there, going to be there on all sectors. Noted your points, Raju sir. Madanji, let me now come back to you and take a wider perspective, specifically on the fiscal consolidation. Is what everyone is expecting government will look at quite rationally. One, what is your overall view on the fiscal consolidation? Why it is important for government right now? Because we have seen, the deficit is going to be little out of their comfort zone. But at the same time, do you also think that the government have some scope left to spend more uh, going ahead?
Okay, Amal, before I come to that, if you'll permit me, I would like to also add my couple of thoughts which I had on the investment side. I think what we are seeing today is that the government is spending. The government has done quite a bit through the policies. If you look at the PLI, for example, I think that's been one of the most astounding policies of the government, which was introduced, I think, a couple of years back in the budget. It's based on performance, saying that you perform and I'll give you a return. In return, you get that cash benefit which is being given. But so far, we have seen very limited response which has come. There's a lot of noise factor, of course. We keep hearing of lots of companies which have applied for it. But if we finally see at the end of the day as to what kind of investment proposals are coming through, it's been very much limited. I think CMI's data on private sector investment announcements, I'm only talking of announcements, it's not really very positive for the first 9 months of the year, where we have seen it's been restricted to a couple of sectors, the aviation sector, bit of that in the oil sector, bit in chemicals. It's not been overall, it's not all encompassing. So my sense is that we're seeing investment happening more in infrastructure related industries where the government has been taking a big lead out there. So I think the private sector needs to start doing things, and they will do it only in case consumption increases. So that's a deeper problem which is there in the economy of consumption increasing. That's when your capacity utilization improves, and that's when you start investing. Now, that's it. Let me get back to the question which you said. I think fiscal consolidation is something which the government has been very keen on. And if you have seen right from the time when the government came to power in 2014, there have, of course, been a number of reverses because of what happened during COVID. But there's always been this determination to make sure that you're able to lower your fiscal deficit ratio. So today we are at around 5.9. We may end up at probably 5.9 or 6% after whatever has happened on the revenue as well as the expenditure side. But my sense is that the government will go back to 5. So maybe be looking at something closer to 5.4, 5.5% for this year. Now, why is this important? This is important because of the way in which it's financed. So we in the banking sector, the entire market is always worried about that number of 5.5 or 6% which comes out, because that's going to have a bearing on the overall government borrowing program. And given the fact that we are expecting the Indian economy, the private sector investment cycle to pick up, there's going to be more demand for funds. Is there going to be a case of crowding out of private investment because of too much of government borrowing? So here, I think to the credit of RBI, I think things are being managed very well. So even though we have a gross borrowing program which goes closer towards 15 lakh crores, we haven't really seen pressure on either liquidity or in terms of interest rates. The bond yields have been very well behaved all through. So I think the government will continue on the fiscal consolidation part. This would, of course, mean that there will be certain compromises which may have to be done on expenditure. So far, until last year, we had a high fiscal deficit of 5.9%, but the government was able to up its capex to around 22% of the overall budget. Out of 45 lakh crores, we had 10 lakh crores for capex. I would tend to believe that this would be something which would be maintained, but there would also be a comparable amount of increases which we see on the social welfare programs, something which is, of course, essential for an economy like ours.
Sure, I think the target is there. Let me come back to you more on that particular point. But I think you also mentioned about social welfare, and I wanted to ask, in fact, about social and the social scheme. So let me bring Nilesh sir here. So Nilesh sir, my basic and a very important question now is, which I'm trying to understand. Every time when there is a budget, the insurance companies will say, or the customers will say, "Oh, tax bracket thoda badhna chahiye, ATD, ATC limit thodi badhni chahiye," and then insurance companies will also expect that. But fundamentally, if you look at it, it's been 2 decades since the private companies came into the picture. The limit still didn't go to the level where we are expecting. But after so many private companies, do you think now the insurance itself should be a very prominent segment, and it should not maybe look at tax bracket or something? Specifically after pandemic, people should maybe look at insurance as one of the very, very important segment, and maybe government should not just look at taxation but something else, maybe to promote such schemes like maybe Pradhan Mantri Suraksha Yojana, Jana Dhan Suraksha Yojana Limited kind of schemes which they launched. So on that front, what do you think the government should do actually, specifically at large level, looking at the social security of the customers and the individuals?
Yeah, Amol, a couple of things actually. This limit of ATC, which was 1.5 lakh since ages immemorial, has not gone up. And insurance at one point of time was looked at as an instrument to save tax. But then a lot of other instruments also have been added to it. There are at least a dozen more. And it has lost that attraction that only if you have to save tax, you have to go to insurance. Second is the new generation has understood that insurance should be purchased for covering risk on life. and as an investment, it is not that good an instrument as other instruments are available in the market. Still, there are a couple of people, especially in rural areas, who tend to subscribe to savings linked insurance schemes. And the reason being most probably that the mutual funds and other investment avenues, which
Correct.
should be at their doorstep, have still not reached. While the insurance agents have reached the nooks and corners of the country. So that may be one of the reasons.
Correct.
But those who are subscribing to insurance, in general, for savings oriented schemes, they will definitely come down over a period of time. They will more and more people will look to insurance only from risk coverage perspective. Government also in the last couple of years has seen that insurance should not be given any sort of leeway from taxation point of view. Like it used to be, if you pay premium, you get tax relief. The bonus that you get is also tax free, and the maturity that you get is also tax free. That used to happen in the past, and effectively, the rate of return on insurance policies used to be quite substantial for those who were paying tax. But now, over a period of time, all those attractions are going. There is no longer EEE pattern for insurance. We have seen
Correct.
last year there was an amendment, and by way of which anybody paying more than 5 lakhs of premium in a year, beyond that, you don't get any relief for. Second is government also wants to push the taxpayers to the new tax regime, and the new tax regime doesn't promote any sort of tax concessions on account of your savings. Uh, in the past, government has taken steps to see that more and more people, taxpayers, they move to new tax regime, but the success has not been that significant.
Correct.
So there is a possibility that at some point of time, government will say, "Stop now. Going forward, there will be only new tax regime will be in which will be in existence." So all these soaps, tax soaps, which are available for insurance or for NPS or for anything else for that matter, are not going to last long, in my opinion. And taking all that into account, these instruments should not be looked from taxation point of view, and that
Correct.
people also have started understanding about it.
Hmm. Hmm.
So going forward, one, especially the new generation has understood the importance of insurance from risk coverage point of view and not from savings oriented plans of insurance. Second is government also is not promoting too much of tax saving aspect for insurance policies. And third most important is the risk of dying early and living too long. These two risks are basically covered by insurance.
Right.
But from 2004, when PFRDA was formed and NPS was carved out, more tax opportunities are available for retirement solutions provided by NPS as against the retirement solutions provided by insurance companies. So obviously, more and more people are going to move towards NPS than retirement savings as a part of insurance plans. So this is also bound to happen. So going forward, I do not find finance minister to give any sort of additional concessions to insurance sector, and not only to insurance sector but to other forms of savings as well.
Okay. So government not promoting tax saving schemes, absolutely understood. But are you clearly making a point that government may not look at even giving any redemption specifically for insurance hereafter?
Yeah, Amol, that is likely to happen.
Okay.
And let us not expect that
Okay.
some changes will be brought about, especially in this interim budget. One is it is the interim budget, so not major changes will happen.
Yes.
Second is one specific thing which, from income tax point of view, I have been actually advocating that when we had more than 50-60% income tax on corporates, up to 70%, the tax on insurance companies, which is on surplus, used to be at 14%, which is now at 12.5% for insurance. Say. But for corporates, now it has been reduced to 25-30% of tax effectively. But a similar reduction has not been given by the government for insurance companies. Still, they have to keep on paying tax at 12.5%. This is one major anomaly, I will say, which government has not looked into. which they should, because insurance business itself is very
Yes.
capital intensive, unlike mutual funds or even banks to that extent.
Hmm.
And second is insurance companies, 50% of the investable funds are
Hmm.
going for government securities, investments in government securities, which is indirectly helping government to raise funds at reasonably low rate of interest. So some sort of concession needs to be given, but government is not in a mood to give it.
Sure, that explains a lot, Nilesh sir. Sachindraji, ji, let me ask you something which is very specific to the domain that you operate into. When we look at SMEs and MSMEs, there has been a strong push from the government. Even during pandemic, government pumped in a lot of capital specifically for the MSMEs. What are maybe the key points that you think that the government should do now, to promote maybe SME, MSME financing? Because you mentioned a couple of gaps there in your previous comment. Anything specific that you think that the government should look at, if not in the interim budget, but in the following budget, once perhaps the new government comes into the power, they should look at it.
Yes. So, Amol, one of the biggest problem, I
Yeah.
think so, there are a number of entities which are seeing this massive trend,
Hmm.
which is coming. So, formalization of MSME economy is happening at an accelerated pace. That
Right.
is courtesy DMON, then GST, digitization of banking, and maturity of bureau,
Hmm.
which means the traditional problem of lending institution of how to assess the repayment capacity is getting eliminated with degree of comfort. Now,
Hmm.
the next biggest challenge is that the businesses or the entities who has to provide that credit, where
Hmm.
they get the equity and the debt capital support. So
Hmm.
today, for example, if there is an fintech or an NBFC which has to grow MSME credit, they are 100% dependent upon a global private equity fund or foreign direct investment when it comes to getting the capital. And when it comes to debt, they are predominantly dependent on a public sector bank and a private sector bank. To give you an
Right.
example, government has an entity called IFCI, which is
Hmm.
listed. You
Hmm.
can technically convert IFCI as the provider of equity and debt capital for dedicated to the financial sector or NBFC fintech, which are dedicated to priority sector. So
Okay.
government actually doesn't need to provide capital from budgetary support. You government can do an off balance sheet support in form of some kind of a guarantee of return,
Hmm.
raise money from public market, and convert IFC as an institution which provide equity capital for triple B minus to A rated entity, and also provide tier 2 capital bond support. So
Hmm.
we have to find a way to unleash the power of the capital from public market, which can then flow to entities which are willing to do hard work of credit dissemination for these sectors, whether it
Hmm.
is agri, whether it is MSME, whether other sectors of the priority sector, because that would only contribute to the productive economy, and that would generate massive employment across the length and breadth of our nation.
Hmm. Sure. So let me bring Raju sir also here. Raju sir, since you're talking about credit dissemination, after the whole affordable segment, we saw a couple of rallies into the housing finance companies operating specifically in that domain. So government kind of pushed a couple of things, whether it's MSME, microfinance, and the retail housing finance. And in fact, we have seen a greater rally on the retail side in last couple of years. To continue this rally, what kind of support as a banker you think now the government should provide? Because at least this retail or the microfinance companies have, or the microfinance entrepreneurs have reached to one level. But as a banker, you will have to be more comfortable while lending it to them, either through NBFCs or fintech. So what do you think, the guarantee that the government had given earlier during pandemic, do you think something like this should be on the cards, or something like that maybe?
So Amol, I think, and I would just pick up from where Sachin left. I think uh, so just I divide the enablements for MSME are getting faster, as Sachin has said. The
Hmm.
whole three, four things which have happened, and I think the government is doing a good job. The Udyam Assist, SIDBI is really pushing so that the formalization is spread at a lower and lower cost across. Okay,
Right.
I think what is needed is that distribution to MSMEs is still very, very patchy. I mean, let me be very honest. It's the NBFCs which have brought, uh, MSME into the kind of lexicon in terms of financing. I mean, banks by themselves were doing a job, but it's not easy for a bank branch to do this, and that. So the NBFCs have done a very, very good role. So I think somewhere we need to recognize that the NBFC distribution makes a lot of sense. That banks have to use the NBFCs as the onward dissemination of credit. And I think the overall capital support to the financial sector in the form of refinance lines, which SIDBI is giving, or capital or tier two, which can become an accelerant. So let me give you a corollary. Like in the financial sector, we've seen that happen many a time. But today, PLI has a certain momentum because the government has made it a kind of a thing. Can we
Right.
actually think of, I'm sorry to use the same analogy, but a same thinking towards MSME financing institutions? Okay. So if you think about how the US government democratized home ownership 50
Right.
years ago, post the World War, you had Federal Home Loan Association, and those are the guys who actually allowed to marry distribution of small community banks with the capital structure of a government or a quasi government. I think India has done this many times. I think what we need to do, that today the starting position or the initial position of MSMEs is at least in terms of the core is far better. I think it will only accelerate. And again, I'm not for one moment denying that the macro reforms around logistics, power, road availability, connecting to supply chains are all done and dusted. A lot needs to be done. But access to capital in a timely fashion and not even a cost is extremely important. And therefore, the role of NBFCs and banks working in partnership with them is very vital. Now, I'll give you an example
Sure.
closer home to RBL. We have 530 branches. We cannot reach out to the MSMEs across. We have a subsidiary which does microfinance, and the next graduation of microfinance is very tiny small business finance, and then will be the MSME. Now those are things we are doing through our subsidiary, but I can tell you that distribution took us 8-10 years to get there. If we had done it in the bank, it would have never started, because it's a level of focus you need when there is a new segment, a new opportunity where hiring becomes a very unique capability rather than just a generic capability, where risk understanding becomes very localized instead of central offices. So I'd say that we have to see India as a tiered distribution even in financial services. Okay,
Right.
like we see in FMCG or other products. And the government, and especially SIDBI, which is doing a phenomenal job, can play the role of accelerating this process, because it cannot be done just by one segment of banks or one segment of NBFC. So my
Right.
view is that outside of the macro reforms, the product market reforms, there lies a need to actually accelerate capital provisioning of a risk-taking kind, not just, I'll just do refinance. I think that to me is a crying need. And if we can do it, it's not even, I mean, look what we did in the pandemic through GECL. If the GECL wasn't there, you'd have had many, many more failures. Okay. And the government stepped in. Now, I'm not saying we have a situation like that, but if we have to truly democratize the growth and move away from the K shape which people talk about, MSME is a very, very, very important part of both. The number of entities, the people employed, the exports, etc. And you'll be surprised the MSMEs are actually as modern as some of the more formal corporates are concerned, and they have access to tools which can help them grow. But capital provisioning, debt provisioning is very vital in a timely manner.
Quite meaningful one, very detailed one,
Amol,
Rajesh.
if I can add just 2 bits on this,
Okay,
right?
okay, sure. Please go ahead.
Just look at this. If you look at last one full decade, number of NBFCs and other fintechs who has either gone IPO or who has created significant amount of the value. who has finally benefited? It is a US, domiciled private equity or a global fund whose ultimate beneficiary is a pension or an endowment person sitting in the United States of America. If
Right.
you look at the failure, except the DHFL and one or two, in the entire banking and NBFC sector, the failures have been one or two, but we keep beating about them, right?
Hmm.
But generally, the financial sector have been fairly resilient. So, as
Hmm.
Rajiv ji said, if we create an institution which supports the both capital provisioning on the equity side, the debt side, the tier two capital, you will unleash, and finally, Indian public would benefit from that. Government would benefit from that. You
Right.
create an entity with a 25,000 crore of equity capital base and 1 lakh crore of debt capital base, and that would multiply at least 50 lakh crore, 30 to 50 lakh crore of debt financing to deserving sectors.
Hmm. True. So I think again, the point that access to capital, which was alluded by you and mentioned by Raju sir, quite important. And in fact, when you speak about MSMEs and microfinance companies, I remember the founder of Alibaba, the Jack Ma, said it very clearly in his book and a lot of speeches that henceforth the world will be dominated by the millionaire businessmen and not all the billionaire businessmen. So we should look at them very seriously. We will have very few billion-dollar companies, but we'll have a lot of million-dollar companies, and that's when access to capital should be quite easy for them. So Madan sir, we have started receiving a lot of questions. Okay, Nilesh sir, please go ahead.
No, no,
And
only one, only one point, Amol, I wanted to make.
sure.
Supplementing what Rajiv ji and Sachendra ji have said, we had in the past IDBI, ICICI, which were financing institutions for SME sector and large scale as well. And it used to be large scale financing for a longer term.
Hmm.
Now banks cannot finance for a longer term. They don't, neither do they have expertise, nor their asset liabilities matching happens in the process.
Right.
So we need to create institutions like ICICI, IDBI, IDFC, at least one institution, which will take care of the requirements of SME in equity as well as debt, especially the long-term funding which is required. And that is one thing which can happen only in the budget. It cannot happen outside the budget. So this is one thing which I'm expecting from the budget. May not be interim, but maybe next year, which is coming up.
Right, sure. So I have started receiving a couple of questions. I think one or two we have already answered, but I will start shooting them. So Madan sir, I will shoot this question to you, which is for the benefit of all of us and the world at large, specifically about the tax rebate. Though Nilesh sir had supplemented on that earlier, but the question is, with the cost of living going up and loan interest rising, can the people expect a relaxation in the income tax rates for individuals?
No, I think practically speaking, we should not be expecting anything from the budget, either this budget or even in future. I think the motivation or the of the government is to include as many people, to give less on the taxation front, and for the so-called underprivileged people, I think there's a lot of redistribution policies which is being pursued. So, as was mentioned earlier, also, I think the government is going to finally push or rather nudge everybody to renew taxation system, and the old one is going to disappear. So it's not going to be. I mean, the budget is not going to be any kind of source of inducing taxes because of inducing savings. In fact, I would have felt that the tax-free bond was a very good idea, especially when you're talking of a green economy. There could be certain benefits given on that. But I think this has been something which has been on the discussion table for a long time. But going by the ideology of the government, I think the idea is to move towards a very simple system where you have lower tax rates. I think that's what the new tax scheme says, and those who have the ability to pay higher taxes and to actually do away with all these so-called concessions and keep the system simple. So even I would like to have a lot of tax benefits, but practically speaking, I wouldn't be expecting it.
Sure, we all would like to have some tax benefits for sure. Rajiv sir, maybe you can take this question. So obviously, access to capital for the SMEs and microfinance businesses and businesses large is specifically for startups is important, but the higher rate of interest is also an issue. Is there any way that going ahead the interest rates can be reduced, or we can see a lower interest rates?
You see, again, Amol, the important thing is to understand is that we are in a very competitive market. I mean, some of the work we are doing, and I know Sachin is doing some fabulous work on the MSME side. I can tell you that as more and more tools available, access available, information available, competition itself is going to keep the total cost of raising debt. See that there's a difference. There's a rate of interest, and there's a timely access, and there's a adequacy of access. You can get lower rates, but you don't get it timely, has no meaning. Okay, for an MSME. The total cost of debt capital, because of all the things we've been talking about, is going to continue trending to more competitive. I can't say down or up because the underlying rates have gone up by 250 basis points over the last 4-6 quarters. But I think today when I see MSMEs who are, I would say, even small at the very micro level, there are enough competition in the likes of Sachin and others who's actually reaching them out well before banks do. So, if they can get their arms around the risk management, how is this the leverage good enough? I think you'll see that happen. I think I'm not in favor of, I mean, I'm not, let me put it this way. I think there can be help in terms of lower cost of financing, because when we get SIDBI refinance, it basically means it's lower cost of financing for us. I think what we all need is expansion of the market, expansion in the number of players and the
Right.
types of players. There can be players which are essentially marketplaces, digital, who can bring the customer closer to the financier, and the financier will reduce the cost of administration. Okay, all of those things are experiments working in the market. Supply chain. Supply chain costs are very competitive because we have a support of an anchor in terms of knowledge. Even if it's not explicit guarantee, we know that this MSME has been a supplier to this anchor for the last 10 years. Treds.
Yes.
Again, Treds is a very, very, very interesting format and platform done. E-government marketplace. All of these things ensure that the asymmetry of information, costs arise because there's asymmetry of information.
Right.
Okay, or there's cost of building out distribution.
Yeah.
As we continue partnering,
Hmm. Hmm.
we continue getting information, the total cost of debt capital will keep getting more and more competitive and will reflect the underlying yield as well as the underlying risk of doing so.
Very well said, Rajivji. Nilesh sir, you partly mentioned about insurance bill, but there is one question, I have received specifically on the insurance bill. So, do you think insurance amendment bill will be taken up in the budget session? Also, what do you think about the initiatives like composite licenses?
Yeah, in all probability, it will not be taken in the interim budget
Right.
because it appears that the interim budget is technically not meant for bringing about any new
Exactly.
changes. But in the next budget, which will be a full budget, there is a possibility that it may be placed. Not just a composite license, there are a host of recommendations for amendment to Insurance Act, and a
Right.
major one being, as recommended by IRDA, why so much of capital is required for insurance business? Answer is because we don't give regional licenses, we don't give line of business level licenses. Like if some insurance company wants to do only motor business and they don't want to do other lines of business, then it's a short tail. Why 1,000 crores of capital is required? Answer is no, it will not be required. Or suppose there is a company which is very strong in, say, one region, say Kerala. They don't want to operate all over India. Why do they need so much of capital?
Right.
So
Right.
this is something which is likely to happen. And again, some corrections are required in the Insurance Act. One major one is you can either do life or general or health. Actually, you can do all the three. So that is again what is being proposed in the
Right.
amendments to Insurance Act. So a lot of changes. One change which is very vital, but doubt whether government will have courage to put it forth is on investment pattern. Like the Insurance Act says, minimum 50% of the investable fund should go to government securities, central and state together. Now, if that can be freed whether there will be a lot of criticism on government.
Hmm.
That is what which government is looking into, I suppose.
Okay.
But that
Okay.
is again one of the amendment, one of the proposals for the Insurance Act amendment. So if all these things may come in the final full budget of the next year, but I doubt if it can be submitted in this budget session of the parliament.
Okay, noted your points. I think there are a few more questions, but we, I think, partly already discussed that. One important question, Madan sir, I would like you to, tell me is, I mean, again, in first two questions, we partly discussed that, but if you could be very specific in terms of, earlier we discussed, 3% FD specifically for FY 2021 that could not happen because of the pandemic. Now we are targeting 4.5%. I think we'll settle on, much larger than that. Do you think that by 2026, the target which we had of 4.5% will achieve that by any chance? Or, or by then, how and where we will settle down specifically on the FD side, fiscal deficit?
No, I think it is going to be very challenging to get to 4.5% because we're just talking of another 2 years
Yes.
where you'll have to lower the fiscal deficit by 1.5%. And a lot will actually depend upon how my GDP grows. Now, while we in Bank of Baroda still believe that India can grow at around 6.7, 6.8% in next year, there's a large set of economists who feel that the growth will be even below 6.5%. So I think the crux to it is essentially whether we're going to have a higher rate of GDP growth, which will actually justify a higher amount of revenue, so that we are in a position where we can say that we can go along a more aggressive reduction in the fiscal deficit. Today, I think the problem which we have, which I had mentioned earlier, is that private sector investment is not picking up. So I think what the central government is doing quite a bit of heavy lifting when it comes on capex. Ideally, according to me, the government's role is not to bring about growth. But unfortunately, in the last 5, 6 years, we have seen that we're all turning to the government because the private sector is not investing enough. So therefore, we have both the center as well as the states which have been doing this heavy lifting. So I think 4.5% is going to be a challenging job. And you cannot bring it down drastically from 6% to say 4.5%, because that will mean you'll have to cut down on lots of expenditures, which you cannot do. Just remember, the government has said very clearly that it's going to give the free food to 800 million poor people, which means we have so many underprivileged people in the country. So the social welfare programs cannot be compromised. I don't think that's the right thing to do. At the same time, you continue with the capex, there will be relentless pressure on reducing the fiscal deficit. So it could probably take up one more year, but I think the government will do its best to at least get close to it in 2 years' time.
Sure. So, gentlemen, I'm almost come to the close now, but one quick question to all of you, since we have 2 to 3 minutes left, and that question is slightly different from what we discussed. We discussed what are the expectations and what government should do. Let's discuss what government should not do. I know it's a word of thanks and in its interim budget, but what is it that you think that the government should not do at all in this budget and even in the coming budget? Nilesh sir, can I start with you?
No, no. What government should not do at all is obviously what Madanji has said. Fiscal deficit is one thing which you should always focus on, and you should not unnecessarily keep spending money on unproductive requirements. So this is one thing which government should not do, in my opinion. And second is always it should look at spending more on health and education, which are absolutely important, but government has not been doing it for long. So that is something which they should not continue to do. That is no focus on health and education. This is something which comes to my mind.
Raju sir, what would you not like to expect?
Well,
What
I
government
think I'm first of all, I'm in the camp that I think we have a policy framework which is fairly well established. There will be changes, but the policy framework is well established. I think what I'd agree that what we should not do is give away the hard earned goodwill that this is a fiscally very sound, not I mean both fiscally and monetarily a very sound management of the Indian economy. I mean, one of the things I will say that on a relative basis we stand out in spite of the multitude of challenges we observe. Okay, so I would not like to give it up because ultimately that also reduces the kind of the delta on the cost of financing. for the country as a whole and therefore for us. So, I mean, today, a lot of the well established, very mature, and highly credit rated countries are going through a very tough phase. And unlikely they will have an easy way out.
Right.
India should not give up where we stand today, that they have acted very prudently and yet carried the nation generally over the last 2-3 years. I think that I would say is as much a matter of details as a matter of uh, perception, reputation, which we should not forsake.
Certainly. Sachindraji?
I would say what government should not do is consolidation of banks. I think so. We have been in an era wherein there was a time when there was a need to consolidate public sector banks. You do more, and the economy would get more credit stock. India needs more banks, more financial institutions than what we have today. If we have to really achieve our $5 trillion target, or we have to be Atmanirbhar. So the balance of the 12 public sector bank and the plan to consolidate 3 of them is not a good idea, because they are now all healthy. You should actually let them grow, and government should try increasing the penetration of credit for deserving sectors. Don't consolidate more banks.
Noted. Madanji?
See, I would say that there is something on the taxation front which the government should definitely not do. You remember some time back we were told that you invest in equities, you make a capital gain more than 1 year, you don't pay any tax. Now you suddenly say at some point of time, 1 lakh, beyond that you start paying tax. We remember we had this thing of debt funds we used to invest in. The moment we invest in a debt fund, you said if it was more than 1 year, long-term capital gain. Then you made it 3 years, long-term capital gain. And then last year you say that no capital, you have to pay it before everything gets taxable. So I think this uncertainty makes at the individual level very difficult for one to plan your future. Dividends at one time were tax-free. Suddenly you say that no, you're going to be taxed. So I think this kind of thing should definitely come to an end, because people need to have certainty in terms of what they're going to do with the money, where they are saving. And today we're talking of all these sectors: mutual funds, insurance. Any kind of change we bring to it actually creates chaos when people try to do their savings. I think that's what should be there. There should be a clear tax structure. You should not be whimsical. You should not keep saying suddenly I'll give something to pension funds. Tomorrow you never know, they may just say that I'm going to tax everything at 30%. Why should there be any split out there? So I think certainty in the tax structure, I think that is something which I would like. Therefore, don't bring about any more changes in the tax structure, especially when it concerns individuals.
Very realistic and meaningful thoughts from all of you. In fact, I hope the officers from the finance ministry and the budget makers listens to this conversation, and we try to incorporate a couple of points. But thank you so much, Madanji, Nileshji, Rajivji, and Sachindraji, for sharing meaningful thoughts here and being part of ETBFSI budget series. Thank you so much.
Thank you.
Thank
Thank
you.
you. Thank you, everybody.
Thank you.
Thanks.
Thank you so much.